Hi, everyone. Welcome to yet another Mediation and Beyond recording on YouTube. Today, we're talking with Joanmarie Zoeller, and she is in the insurance business. And so one of the reasons I asked Joanmarie to come on today was because I think that insurance can be confusing and I think we need some clarity around some of these terms. So let me introduce her. Joanmarie, thanks for coming on today. So Joanmarie's been in sales and service in the industry for over a decade. She's a licensed insurance agent for auto, home, life throughout Connecticut and New York, which is helpful. She's with Liberty Mutual and can write for a number of other A-rated carriers that she's partnered with to ensure that they have the best options for every customer. Her goal each time is to make sure that customers are protected properly, best rates, and that life insurance is, she thinks, and I do too, this is one of the reasons I have her on, is so important to get while you are insurable, which is an interesting way to put that. So we'll talk about that. She has options from 15 days old for our little babies that are coming to retirement. And she'll be able to review all your options with you, what the benefits are of each. She's going to talk to us today about term, whole, and universal. And so, Joanmarie, thanks so much for coming on today, because I think this is such an important topic.
Yeah, I really appreciate you having me on, especially in your space when you're dealing with mediation and people who are maybe going through times in their life that are changing. As I was talking to you earlier, something where maybe they're not used to handling the insurance side of things, or they've got a million things going on during that time. So my goal really is to just take some of that off their plate, like you mentioned, shopping other carriers. So just looking at them as a whole, what their assets are, what they need to protect. Just make sure that they're protected properly. And like you mentioned, Liberty, and I have carriers, so just each time I'm looking at each individual to get them the best options we have.
Now, when you say carriers, what do you mean? Like, I have carriers? What does that mean?
So as far as different insurance companies I can write for. So while we are Liberty, we partner with some other carriers to, just make sure that we have good options. Everybody has a different appetite. So say, for instance, if you were to add on a teenage driver, maybe that wasn't too favorable with one carrier, but then I'm able to get you a competitive rate elsewhere. So it just helps me have options. There's some carriers that are good with high value homes. There's some carriers that are good with stuff on the coastline. So it just helps me have a lot of options for our clients.
Oh, see, now I would have never known that. I would think if it's Liberty Mutual, that's it. You got to go with whatever they are, and that's it. But you can. So if I was a customer to come to you, I could shop around, or you would shop around on my behalf. Really, is what you're saying. I don't even have to do the legwork. You do the legwork for me, and then you present me. Okay, then you present me with quotes based on whether it's home, auto, life, whatever it's going to be.
Exactly. It's almost, if you picture like a price line or a kayak, you give me the needs. I'm able to check out multiple carriers at the same time to see who offers what benefits at what cost, and just get you the best value.
Oh, I like that. Okay, that I didn't even know that. So right there, I've already learned something today. We could be done. Good to go. All right. So one of the reasons I wanted to have you on today, because the scope of work I do, which is really a lot of divorce and relationship work, and when I'm doing that. And you're, setting somebody up for child support or alimony, let's say, take those two issues just for starting. I will always tell people get insurance on both those items, so that in case someone passes, that whatever those monies were supposed to be given to whomever, that they would be insurable and they would come off that that they would still get their monies. How does that work?
Yeah, again, so with me, I'm very relationship based. I don't like to just do cookie cutter. I want to understand everybody's story. I'm working with someone right now who's in the process of going through a divorce, selling the house that she's in, buying another house, switching insurance, and all that good stuff. So my goal each time is just to hear the story. Do they have little ones? Do they have assets that they're splitting? And just be able to, the biggest thing is you want to make sure that I kind of do an analysis to see what their needs are. Do they need to cover children's education? Do they have loans that they have standing out? Really just dig into the amount that they need versus just throwing a number out there, that in the event something happened, that you have the peace of mind that your family is taken care of. So whether that means, doing it for your children, or having to separate things and make sure that you're going to be okay if something was to happen, if there was an income that needed to be replaced. Really, it's just looking at each situation and making sure that, we have to, the biggest thing is getting as much coverage as you can for the budget that you can afford, so we want to just really make sure, what do you need, what can you afford, and just put the perfect package together that gets you the most that you can.
Well, this is interesting because this sounds a lot like financial planning with insurance.
Yep.
Which
Yeah, I mean,
I would have never put the two together, but as you're speaking, I'm thinking, well, this is exactly how I would speak with someone doing financial planning, right? What are your assets? What do you need? What long-term, short-term? And so that's kind of how I hear you.
there's even pieces, I think so many people, even, today our focus, because it is so important, is life, but in general, just all, I'd take a deep dive and take a look at everything that you have, because I think so many people, you're not there to be an agent. You're just, I need full coverage. So what does that mean? In the event something really happens, how are you protected? What are your liability limits? If you're state minimums and you have a home and something happens, you have a big liability suit, they can garnish your wages, it can go against your house. So that's why it's really important to me just to be able to take a look at the client as a whole and make sure that they're protected, whether it be for their auto, their home, that they have enough to take care of their family. So,
All right, well, let's break this down then. Let's look at whole life insurance and versus term. So can you explain for people out there, like, what is whole what is whole life insurance? What is that?
yep, absolutely. So, it sounds like it is. It's for your whole life. So it's something where whole life is going to be more expensive than term because it's going to last throughout your whole life. But that's going to be something you carry forever, and it's permanent coverage for needs that you'll always have. So say things like funeral expenses. Um, it does also build cash value, which is a nice piece. There's some cool things you can do for children as well. So again, when I said make sure you do it when insurable, you might not think of that, or you say, oh, I have life insurance through work, but you might only have a certain limit, or say you leave that job, you no longer have that policy. So if you could lock in at a rate when you're, say 10 years old with no issues and you're insurable, versus by the time you're 45 and now maybe it's more expensive. So with that, it's just good to be able to, with the whole life, there are some children options, like I said, age 15 days old, where you're able to actually don't look at it in like a morbid way of something happened to the children, but more of a grow up plan where you're setting your kids up for the future. So with that, there's even 20-year pay for the kids. So it lasts their whole life, but it's paid off in 20 years. And because they're so little, and hopefully they have, they haven't had much time to hopefully have too many issues yet, they are, there's a rider I can put on that they're guaranteed insurable. So this thing's paid off in 20 years, but it lasts their whole life. And say when they're down the road, if they were to get a disease or something like that, they're guaranteed to be able to buy more insurance. They just buy it at that age. So there's some cool stuff that you can set your kids up from a young age. And then also, as we move into speaking of term and whole life, where, this isn't just a one-time type of thing. This is something where I'd be there as an advisor to review it each year. There's a hill of life, right? Where maybe your mortgage, you're a first-time home buyer, you're going to have a bigger debt there. Then you start to pay it off. You've got kids going to college, then maybe they're out of the house, and life changes. So you can always also take some of the term and move it to permanent as your life changes. So it can always be kind of modified as well.
So you're saying take some of the term and move it to whole?
Yeah. So
Okay.
you can, yeah, there's, again, each situation is different. And again, budget. In a perfect world, would everybody want a policy that lasts their whole life and you just have it? Yes. But, it's going to be pricier to get something that lasts whole life, versus with term, it's a set period of time. So you can say 10 years, 15 years, 20, 30 years. I would always say buy as much as you can, that you can afford. So again, if if you can afford to do 250,000 or whatever you need. Another piece with that I wanted to mention too is I do simplified issue policies, so I can write up to 250,000 with no medical exam. So especially with everything going on right now with COVID, it's a brief application with me over the phone. They do a small prescription check, that type of thing, but it's a pretty easy approval process. And then if you need to go over 250, there's absolutely, it's a small blood work and stuff like that, but you definitely can, go into the millions if whatever you need to protect.
If you pay off your whole life policy, is it like a savings where you can then can you draw on it? Or
Yeah, there's different.
You can only use it if the only good is it only good if you die?
There's a benefit, but with that, there is certain times that you can withdraw without fees and that type of thing. So, whether that be for children or adults, each time that I meet with someone, they'd be able to see an illustration as well that I can present them that basically shows, after X amount of years, how much would you have in there and at what time can you take without penalties and that type of thing. So that's something we would
So that's what
dive
I'm
into.
trying to just understand though. It isn't just to use and if you die and then the rest goes to a beneficiary. I'm trying to say you can actually.
It can also be like an emergency fund as well. Yep.
Right, or a savings thing where you can dig into at some point in time, because it wouldn't make sense to me to have a whole life policy that you can never use if the only good of it is if it pays off you being dead, and then there's a beneficiary to the policy, is correct, right? There's beneficiaries to the policy. And is that a cash payout, or does that mean somebody else gets a policy?
Yeah, no, you can do cash payouts on the whole life.
Okay.
With term, you want to think benefit only. So if I got a term policy for 30 years and, it would be up at 30 years unless I convert it to whole life. But God forbid, in that 30 years, if something happened, it would be taken care of. So I'd have what I have from work, plus I would have what I locked into at whatever age I applied for it.
Okay. And then you spoke to Universal. What is that?
Yep. So the easiest way I can say that, because it can get a little bit complicated, like what is this other? So we get term is specified time, whole life is for your whole life. So what is universal? Universal is basically a hybrid of both. So the nice thing with that is it's fully customizable. So you can choose what age you want it to, what age you want to pay it until, what age you want it to have the benefit until. It also builds cash value. So you can say, I want this, and again, so if you look at pricing wise, right, you're going to go term and then universal life and then whole life as far as cost wise, right? So
Okay.
if you can afford to do the universal life, it's nice because you still get the cash value, but it's more flexible. So with term, okay, here I'm signing up for 30 years, that's it. With this one, I can say, hey, I want to do this till age 65. I want to do this till age 80. You can pick a specific age. Specifically in Connecticut, there's an awesome feature where we actually have a return of deductible feature. So after 25 years, you can actually be able to take what you've earned with no penalty and take the gains. So almost like you were saying, like a savings account, which is nice because term is still a great product, but you do feel more like you're renting. You're hopefully nothing happens, but it's there in case. Versus with universal, you actually can. There is in Connecticut specifically, where, say you put it 25 years out, at year 25, you can decide if you want to keep the benefit or if you want to get your return of premium, which is a nice option.
Well, then why would somebody even bother to do a term?
I would say budget. So again, when you're looking at that tier, again, I'm going to get you the most I can at what your budget is. But if you say your budget is, you need $100,000 and your budget is $30 a month, we have to get you the best thing we can at what the budget is.
Okay.
So yeah, they each have different benefits.
Term you can't draw on, right? That's just it.
It's just a benefit.
My parents are both 93 years old. God bless them. And I've been I do a lot with their finances, and I'm going through, my mother had a box, and here in there, all these term life insurance policies that I think she must have purchased over the years and then stopped paying them at different times. And I'm certainly calling each one to make sure that's the case. But I was saying to myself, well, what a colossal waste of money that you've paid into these things for, even if it's 6 years, let's say, but you have nothing to show for it. So I think that kind of got me with trying to have other people understand insurance so that you actually, I don't want to say don't do that, because that's maybe what she needed to do financially. But I think knowing more of my parents, it would have been they just didn't know.
Yeah. And that's why with me, again, it's nice to be able to meet each person, see their needs, be able to, what can they afford? What's the best option for them? It's not just, kind of cookie cutter one stop shop. So it allows us to, dig in and see what the best option is. If there's someone that can afford to do a universal over term, we can go that route. If it's someone who just wants to know it's there forever. If it's someone who is like, look, I just bought a house. I really just want this as a 30-year or 15-year mortgage in case, God forbid, something happens to me, so my significant other doesn't have hardships when, I was making X. So I think they each have benefits. And then the nice thing is that there are options, and, we can go through each one and kind of see what the best fit is.
And so if that's a good example, because I've I've come across that where, you buy a house and you want to, you have a mortgage. Now, let's say you have a married couple or even a single mom or dad, and they want their new house to go, in case something happens, that they want that house to go to either their partner or their child. Is that part of the mortgage insurance, or is that buying like another separate policy?
Well, I mean, we would more so we would be focused on the life and where that benefit is going to, but that might end up being the money that you need to pay the mortgage. So that's why we call it mortgage protection, where,
Oh,
say there's a income provider in the house that's no longer there, but you still want to have the same lifestyle you have. How am I going to do that without my significant other?
right.
Um, so that's something where it's kind of just that peace of mind. And I would say, again, that insurability piece is huge, because there's so many times where, I mean, things like you get on a medication or height and weight, or you develop a disease or anything, that, you know, as we get older, the reason that the price is more expensive is because we're taking on a bigger risk, because a lot of times life changes throughout the year. So my biggest thing is just making sure each time that, I really deep dive into what their needs are, and what they can afford. And the sooner we can do it, I mean, I think the biggest thing is, even myself, before I was in this, was I'm all set, I have it through work, which you do. But like you said, just like we might not know our policy, what do we have from work? What amount do we have? What does it cover? If I leave there, you're not taking it. And then if you then change careers down the road and now you're no longer insurable, it's really tough when, for me, it's not just making a sale. It's the fact that I'm helping someone protect themselves and their family with the peace of mind. And it's really tough when I have to tell them I can't. So I offer it every time, because there's so many now GoFundMe's and everything else where you might think it's not something you need, but in the event something happens, you're really just able to make sure that your loved ones are set up.
But so if I got a whole term policy, and let's say I've had it for 30 years, it's not paid off, or what, you know what I'm saying? I'm still paying into it. It's COVID. I've lost my job. I can't pay my policy. Is once you stop paying or interrupt a payment, do you lose the policy?
It would probably go a little bit deeper into each policy and how they work, because I know that there are certain ones where, like, if you miss a payment, it's destroyed. And then if there's other ones where they're more flexible, where, they might be able to do payment plans or something like that. So that would kind of be, it would depend which policy you had and those type of things. But yeah, but the nice thing is, and what I tell like all my customers, is that it's nice to be able to have me like on like cell phone dial, like I'm right here, you're not
Yeah.
calling 800. And honestly, even if I don't have the answer, I'll get the answer. So if it was a specific thing from underwriting, I can get back to you on that, that type of thing.
Have you seen that during COVID though, Joni, where people aren't able to make their insurance payments? They've lost a job or whatever the case may be. Have you seen it?
Yeah, I haven't seen it as much on the life side, but I've seen some of it in like auto and that type of thing. But what I have seen is that Liberty, along with a lot of companies, were trying to do the right thing by, either you're getting a little check in the mail as a refund check because you're not driving as much, so they know the risk is less, or they were doing some things where they were doing non-cancels. So if you did lose your job and you're having tough times, where, they're extending it out, or they're extending payments. So I definitely have seen some of that.
So you've seen companies kind of coming together trying to make it a less painful experience because obviously things are in a little bit of chaotic state. Oh, that's a really good thing to hear,
Yeah,
you know,
definitely.
because I know a lot of people that have lost their jobs. And when I'm talking insurance, I'm like, it's good to have it. But if you can't make the payment because of a pandemic, not because of anything else, really, that would kind of suck that you lost all the years you paid into something. Do you know what I mean?
No, definitely. The other thing I've seen during this time is, if anything, I think people actually have more time to be shopping right now. I think usually we're just kind of in our day to day, and we're, maybe we're in the office or whatever we're doing. And while we're still busy working at home, I think a lot of people have been able to, just say, hey, you know what, I haven't looked at my policy in X amount of years. I mean, they might still have a policy from when they were, renting something smaller. Now they have a bigger house and they just need to reevaluate it.
Yeah.
Sometimes when it sits for a while, there's inflation. They might have had their price go up. So I've actually, as much as I was a little bit fearful of, is it going to be really slow? And I think, even in the real estate market, they've seen it too, where we thought everything was going to slow down. But people are moving, people are taking the time to, you know, taking that extra time to shop around. So, and even things, I've talked to so many people that it's something that they always meant to do. I've been meaning to get life insurance, and,
So
and you want to, unfortunately, a lot of times you think of it once it's too late, maybe once you're already sick, or once you're going through something like you want to, it's one of those things where you want to, similar, if you think it, just to simplify it, like auto, your hope is that you never have to do it, but you have to have it. And then in the event it happens, you hope that, you don't have a huge deductible to pay out, your car can get fixed at the shop, and you can continue with life. So it's similar, but just on a bigger aspect, because it's, life is something where you're literally passing it down to protect the people that you love if God forbid something happens.
and nothing changes in your policy if you get, I mean, obviously the point of it is if you get ill during the policy, but the premiums still stay the same, correct? Like that doesn't change, does it?
No, I mean, and that's the thing, is if you can lock in, I always say, like, the younger you can lock in, the sooner you can lock in and get that insurability. I mean, literally, I can do, if any, like, when I'm doing quotes, I can very easily, you can see when there's, you know, by male, by female, by age, you can see a rate go from $15 a month to over $100 a month. So it really is just, it's important to lock in when you can. And the nice thing is that you're locking in at that price. So if you signed up for a term for 30 years at $26 a month, that's what you have. If down the road you need to convert, or you need to move some to whole life, it would be at that age you're at, but you're, at least you were locked in for that whole time at that
Sure.
period.
Sure. So like my daughter's 28. So if I was to tell her to call you and say, listen, go, get a quote, you would probably, I would imagine, do you gear people more towards, if they can, like a whole life policy, especially if you're younger?
Yeah, I mean, I honestly, I give, what I like to do is I like to give the options for each. And while it might not be, I might not have this, 30, 60 minutes to connect with them, I can easily just break it down. Because if you're not in this industry, what does this mean? I have a friend right now, I'm working for her. So I'm breaking it down to help her be able to understand it and make the best decision. Um, So, someone like your daughter, if she wanted to do, I try to get, like I said, the most I can. So whatever the max amount is or what she needs, um, at her age, it's probably very inexpensive to do something like a term policy. Now, if it's something where she's working and she doesn't have, she can afford
Right.
it, then
Mhm.
we look at the term. And if it's something where the whole life is then 100 or something per month and that's out of budget, then we go, you know, we would evaluate each time to see what the best option
And
is.
you can switch around, right? So at some point, if you need a term and then you're in a better position to go whole, you can switch over to whole, right?
Yep, they let you convert it, which is nice. So it's an easy process because you're already approved through them, and you're just, even if you say, okay, I have 250,000 in term, I want to move 20,000 over to whole. I want to move 50,000 over to whole because it is going to be more expensive to move some to whole. But again, as that mortgage is getting paid off and your kids are out of school and all these life changes, you can start to move some to permanent so that then, as you're, continuing to live your life, you have something there that's also there permanently.
Yeah, that makes a lot of sense. I mean, listen, most people get a job and they put all their money in like a 401k or something like that. But in speaking with you, I'm thinking, that's all well and good as well. However, this is also a great investment.
Yeah. So
That's
yeah, I mean, you have the cash value, but you have, the pieces too where it's secure, and the biggest thing is it's the peace of mind knowing that in the event something happens, you're set up, your loved ones are set up.
And now disability, that's a whole separate insurance too? Or would that fall under like term or something? Like,
Yeah, this you want to think of life as how much time you're going to have it for and the benefit as a death benefit. There we do some other stuff I do also do some medical pieces, similar to if you had like accident insurance, that type of thing, if you were to get hurt. So we have that as options too. But life, you really want to just think of, it's not health insurance. It's a death benefit. There are some benefits where it could be non-taxable and looked at as almost, like a cash value and a savings account, which is nice. But yeah, you want to think of life mostly just as, as the benefit to,
and so then, yeah, like a disability and something, that's a different insurance, right? I mean,
yeah.
that's okay. And is accidental and disability, are those similar? Same thing, just different language?
Yeah, I mean, we offer that as well, but I would say separate, where you want to just think of life as taking care of, if God forbid something was to happen, where it's a benefit there, and versus, accident, when you're looking into accident disability stuff, is while you're here, if something happened to you, if you were to, get hurt or, have a serious
Right.
illness, we have some critical illness insurance too that can help there.
Gotcha. So when someone calls you, it really is giving the data of their lives, so to speak, right? And you kind of plugging that in to where you need to plug it in, and then giving someone a bigger picture about these are your options and this is what each option would cost.
Exactly. And I'm very relationship oriented. I like to get to know people. So I'm not just being nosy, but sometimes if you don't ask questions, there could be something you never, that you don't even know that you're not helping them with. I mean, I had one mom who had two little ones, and she ended up finding out through talking to me that she was actually going through a divorce, and she ended up finding out that they had a Gerber policy from when they were kids. She had no idea. It was through her mother-in-law had gotten it. She still doesn't know what it is or anything, but she wanted something where she had some control of it, where she
Right.
knew what the kids had and she wasn't blind to it, and saw the value. So we ended up making sure, of course, we want to make sure mom was set up first so that if something happened to mom, the kids are okay. But again, with the kids being so young, it was affordable, and, she's now set them up for their life. I mean, with me personally, I lost my parents young, and my dad was a mailman, and he had MetLife, and he had, maybe we got, I don't know, 40 grand or something like that. It wasn't, so it really, to me, that's why I mention it every single time. I know how important it is. I know how it can affect families.
Yeah.
Um, just to make sure that, they're able to really just, in the event something happens. I mean, my dad was young, and you're working every day, and you just, I mean, I'm an 80s baby. They weren't thinking about all this life insurance jazz back then. It was just, you get a job, you have insurance, you're all set. So
It's
um
true.
yeah, so definitely important to me, just to make sure my customers every single time know that it's something I at least offer. At least I know that I did my due diligence to let them know.
Well, I also think too, Joni, is that a lot of jobs don't offer it too. Like there's a lot of places that don't have it. I mean, they may have a 401k or something, but they don't offer that, I would imagine, or someone's working under the table, or, there's a lot of part-time work, or they're not offering those things. But I think it really, for me, it's one of those concepts that you just don't think about as a part of your financial picture, which I think it is part of your financial picture, especially if you're taking care of children or a family in general. Or, but I think it's a well-needed conversation to have about, I think, something that we might overlook. And I think you made a really good point about, like, during COVID, people start saying, let me look into that. I've been meaning to do that. Like for driving a car, you have to have insurance to drive your car, but for living or dying, you don't have to have insurance. And so
Yeah.
it's just one of those things that I think it can be an oversight. It's kind of like a will,
Yeah.
like, oh, I'm going to get to that will. I
Yeah.
haven't done that yet. So I think that you make a great point to that.
Yeah, it is. It is so important because, I mean, honestly, with COVID, there has been a little bit of pushback, right? I mean, these companies, they're going to take a deep dive and see, do you have anything going on respiratory? Do you have any background? Do you have anything going on? So, while we've still had approvals and everything, but it depends. There has been stuff that gets, postponed or that type of thing, because they're going to look at it so strict because of right now, unfortunately, the mortality rate with everything going on. So that's why, just in general, it is important, if you're, and I wouldn't even, if you're like, oh, well, I don't think I am healthy enough, just forget it. I mean, I'm always willing to at least try, because the application's really simple. We put in a little bit of information, and then, it's better to try than not try, I would say, because
Well,
again, it's going to be better to have
will,
something than not.
will COVID be changing the application process at all, or like pre-existing conditions, or like, I'm asthmatic, like, is that going to matter now? Because if you're asthmatic, you can, like, being COVID can be a higher risk. And so are those things going to change? Do you see?
It's again, it's kind of like per person. So I do the upfront stuff, and then it goes into underwriting. I just had someone actually that I got approved with asthma, because again, it's seasonal. It depends. Are they on a number of medications? Do they have issues all the time?
Mhm.
So it's really per person, but I mean, our team does a good job of, trying to get the best approval rates. Our goal is to make sure that we want to offer this product to people, as long as, it's something that makes sense to do.
Or
So
if you've had COVID and then you decide, like, if you've already had it and you survived, obviously, and then you say, well, I think I probably should get some insurance. Do things like that make a difference?
I mean, this is all new to us as
Right.
well.
That's what.
But I mean, I've seen a little bit of it come up, where if they had a respiratory thing, or they had a cardiologist type thing, where maybe they put it on pause or that type of thing. But again, it really just depends per person. We let underwriting do their thing, and as long as, they do their best to get an approval whenever we can. So, um, I think COVID has impacted it a little bit, just because I think everybody, with everything going on, is just being a little bit more, um, they're aware of what's going on. But overall, I mean, we've had a lot of success of, getting approvals through this. The nice thing also with the simplified issue is that there's no medical exam or anything like that. So if people don't want someone in their home right now, if they don't want to go to the doctor's office right now, it literally is a conversation with me over the phone, and I submit an application. Everything's digital. And, once everything's processed, we have an idea of approval. And then even with the fully underwritten, there's some blood work and stuff involved, but there is an option, if you felt comfortable, even to have them come to your home. So they can come to your home, or you can go in. But we just, and that's the thing, is it's nice that there are options. So each person, if someone is like, absolutely not, I'm not going outside at all right now, maybe the best option is the simplified issue. I mean, whatever
Right.
makes the most sense is, so I look at the whole picture versus just like, hey, do you want to buy A, B, or C? It's really just what works best for their specific situation.
And let me ask to underwriter. What exactly does an underwriter, what is their job exactly to do? Is it to
So
vet the client?
So underwriting would be looking at the risk, so whether it's auto and they're looking at how many claims you've had, um, if it's in life, they're going to be looking at the background of the prescription checks and that type of thing. So I'm more on the front end. And then the nice thing is that there is, other professionals that kind of do the deep dive into approving the risk.
Okay.
Yep.
And then that's how the quote is determined, I would imagine, or is
Well,
not the quote, whether or not you can get the insurance or not.
exactly.
Okay.
Yeah, I mean, and in part too, because there's different layers too. There's, are you approved at a premier pricing? Are you approved at standard? Are you a smoker? Are you not a smoker? So all those things do go, the risk does go into effect, but pretty much if you're, the rate's going to be the rate if you're a 28-year-old male or a 28-year-old female. If you're a non-smoker and you're at this height and weight, then anybody's going to be at that, so
Gotcha.
it's all health based. And again, comes back to the insurability piece, to do it while you can, while you have, when just as soon as you can. I would, it just helps you to make sure that insurability is huge. I mean, I never, until I got into this space, realized it so much, but there's so many things. Again, like you say, a lot of people, it's something I'll do one day, and there's a possibility that you can't do it one day. So it's nice to,
Mhm.
to do it while you can do it.
And your dad, you were speaking of, he had insurance through his work, probably as a mailman, but probably didn't have any other policy.
Yep. Yeah, there wasn't anything else. And again, I get personal, but it's a big part of,
I think it's important.
yeah. Yeah. I mean, I think each of us have our stories, right? I mean, we each have our stories, and that's just one that sticks out to me. And I mean, luckily we had a family house that we had for 100 years. So me and my sister were left with that. But, um, you know, it was a little MetLife policy or something that I think we got the roof done and that was it.
Right.
So,
Yep.
luckily my sister and I, we've always been working, we've been fine, but, you know, could it help? I mean, I remember, you don't think about these things, but my mom too, she was, in the service industry or whichever. So I remember having to pay for funeral stuff. I mean, nobody wants their kid to have to do that. So I think that, and it's just little stuff like that, where when something happens, the last thing you want to, like, you want to be there to grieve and be with your family, and not, and it ends up being a business, right? Unfortunately, I mean, these things cost money, and very quickly, I think funerals now can go from $10,000 to $50,000 or something like
Right.
that. So, it's just that one less thing to have to worry about, and that, that, in the event something happens, everybody's all right.
Yeah, no, I mean, I look at it, like I said to you earlier, and I appreciate you sharing. My parents are 93, but there's no insurance. They have zero. They have their health insurance, but they have absolutely nothing else. And so you have to really take what they have accumulated and figure out the rest of their days, which includes
Hmm.
their funeral expenses or cremation expenses or whatever it's going to be, their, X, Y, and Z. But you realize, that's why I told you, it got me thinking. It's like, they should have had a policy. And then I told you, I found all these terms, and I'm like, well, that doesn't help us now. Right. Because
Well, and that's why it's so important, where maybe that was the best option then, but that's why it's so important, like an advisor, to talk
yeah,
every year, every 2 years. Um, and then, yeah, I mean, you mentioned like mom and dad being older, there are some of these you can only get up until age 65. So again, there's a cutoff. However, Liberty does offer some options too, where there's like estate maximizers, where if they literally just say they have X amount of money and they don't need it, it's literally just going to go to you, where they can put it in somewhere where it's safe and it actually does build money. So there are still options too. If you have, elderly people, I don't want people to think that it's just, oh, well, they're 67, so never mind, there's nothing, there's
Well, I
options.
might call you and pick your brain then, because,
Yeah.
as people age, there's so many factors that come into play about finances for them. And it's just, that's a whole arena that I didn't even know about. But I do think that's why I'd love for people watching this to like put it into their plan, to,
Yeah.
put insurance into their financial plan. And much like you get your taxes done every year, you might want to revisit your insurance on an annual, or like you're saying, every 2 years, just to kind of revisit and make sure it still fits your needs. I think
Yeah.
that's a great tip.
Yep, absolutely, because life changes, so you can't just keep the same policy forever, so, and then
Yeah.
you have, and a lot of people, you don't want to deal with it, so that's why you have someone like me that can,
Yes.
kind of relook at. I mean, it was similar to what I did recently. I had someone with term that I was able to convert some to whole life, and just relook at rates and everything again. So it just puts them in a better situation. And again, we might be renewing that term, so now they have a fresh another 30 years, so it's just good to always be able to take a look at it and analyze it.
No, I think that's great advice. And all right, so Joni, as you were saying, so like if we had to give people a couple of good solid tips about insurance, what would you give them?
I think my biggest thing is to be able to speak with someone. I'm very like hands-on, like I still till this day, if I'm doing something, I don't always want to do it online. I kind of like to talk to a person, make sure everything. So, I mean, I think it is good to have a contact that you feel you can trust, that can, again, there's so many times where you just, oh, I have full coverage. What does that mean? Like, and again, it's not your job to know every single piece of your insurance, because that's, like that's my job, but to
Right.
simplify it for you and just let you know you're protected. So my biggest thing is, have someone that you can, like you said, even take a look at it. Sometimes you don't know what you're driving around with until it happens. And you're like, oh my goodness, why do I have to pay $2,500 deductible? Why isn't this covered? Um, I think they affect you after the fact. So definitely at least being able to do a review. With life, definitely making sure that it is important to also look at that and not just say, oh, I have it through work, I'm all set. Do you have enough? Do you need more? Would your family be okay if something was to happen? What type do you have? If you leave that job, do you have it? So I think just being a little bit more open-minded to the fact that, you might not have enough, or you might be able to get something else that can assist you, to make sure you're fully protected. Um, yeah, I mean, that's the main piece. And then just knowing that there are options. So knowing, I think maybe some people think it might be too complicated, or it might cost too much. Some people have no idea that they could have a policy for $20 a month, or that there's options where they don't have to do a medical exam. So I think just at least being open to the conversation. If you choose not to, you choose not to, but at least you know that you explored it. So I mean, I think that would be the biggest piece, is just, and to not put it on the back burner until something's wrong, because I think we see that unfortunately all too often, where then it's in top of mind because they need it and they can't get it. So just seeing the value of it, and just, at least checking it out for yourself and your family to make sure that, just take the time to do a quick assessment just to see if it makes sense for you.
Yeah, I think what today for me anyways, and I'm hoping for people who will watch this, is really, it's kind of taking the mystery and the overwhelm out of insurance, because insurance is so vast. Like there's so much about insurance: your house, your life, your disability, your accidental, your this, your that, medical. And so I think it just kind of really, for me, takes the mystery out of it, and doesn't make it feel so that it's not necessary. I think it's one of those things, I'm gonna put it over there. And what I've really learned from you today is like, don't put it over there, because look into it while you can, so that it can serve you now and in the future. Right. And so I think that's really important, especially to take care of our loved ones and not be so confused by it. Like I really do feel my parents definitely were confused by it. I'm like you said, term may have worked then, but I'm thinking my mother just thought, well, I forgot about that and went on to another term, but never really did anything with the whole life. And I think that I look at that and I'm like, probably because you weren't aware, just wasn't aware. And so I think I'm all about educating people, myself included, on the important things that we need to take care of that we kind of just overlook. So thank you for kind of taking that mystery out of it and just kind of layman's terms and, okay, I got it. And so if people want to get in touch with you, how do they best do that?
Yeah, absolutely. Easy enough. My email is my first name dot last name. So Joanmarie.Zoeller, which is ZOELLER at libertymutual.com.
Okay.
And always available on my cell phone, which is 203-260-6651. And you can find me on most social media platforms anyhow. So my full name's Joanmarie. So I've got an insurance Facebook page. I've got my LinkedIn. So
Okay.
yeah, I mean, I'm always available, constantly posting little things that I can work to help. So always open to having a quick conversation to, take a look.
And on Facebook, you're at Joanmarie Zoeller. Is that where they would find you? Okay, I'm going to post that information for people in the details. So anybody who missed the phone number or missed an email or how to contact Joni, that you'll be able to find that there. So just scroll to the bottom of the page and you'll be able to see that. Thank you so much for coming on.
Yeah, thanks for having me.
I really appreciate the time. It's been super helpful, and
Awesome.
I will see you again. And until then, take care, stay safe.
All right, see you soon. Take
Thank
care.
you. Take care. Bye.